You are listening to ChartingWealth.com for Tuesday, the 17th of May, 2016. We always start with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. It tracks the whole market. What do we have? We had a crossover going down on the big chart back on the 28th of April. That was the last two-day candle we had for the month of April. Then we started into the month of May. We saw the market go down for the first three candles in May, the 2nd, the 4th, and the 6th. Had a bit of an uptick on the 10th, and then a red open box down on the 12th, and then more of a down move for the candle on the 16th. Now, for the day, the total market was up almost a percent, 0.93%. That took some of the down movement off the initial candle from the first day, but we still have a red down candle. We have the derivative oscillator. Well, it looks as if it gained just a little bit of energy on the derivative oscillator. So we're still in a confirmed down move. We don't have the MACD moving closer to the signal line, so we continue to have confirmed down moves in the market. It was an up day, but an up day does not make an up market, no matter what the news media may tell you. Let's look and see what we see on the 4-hour chart. An up green box candle in the morning, lots of up movement in the afternoon. It is an open green box. It actually went higher than the market ended up closing out. We have a 2-day trend line where the market is pegged right on that. It did cross back over going up on the 4-hour chart. It had pulled over going down on Friday afternoon, then rotated right back over Monday morning and began to move up. So we have a pullback still underway after an initial pullback started back on the 10th of May. We're waiting for a crossover going down to confirm a re-entry point on a down move for the total market. We don't have that happening yet. Now, let's go back to the 2-day chart, take a look at SPY. It was up 0.99%, so almost 1% for the day. Still below our redrawn 2-day trend line. Derivative oscillator lost a little bit of its energy. The MACD and the signal line are still as far apart as they were all the way back on the 10th. So we'll continue to expect the market to move down, still have a red down candle for the 16th on that 2-day chart. Now, if we go to the 4-hour chart, what do we see? We see market crossed over in the afternoon on the 13th, Friday the 13th, and then popped back up in the morning on the 16th. So we're still below the 2-day trend line. We've had a pullback. See what the market continues to do as we go throughout the course of the week. Still have a negative derivative oscillator, even though the market crossed back up. So that tells us some things too about the move itself. And the move was maybe again half as high, pulled back as far as our Heikin Ashi type candlestick shows. So we'll continue to look at our big charts and see if and when the small charts go back to paralleling those and this backup is over. Perhaps there will be an entry point. Now, if we go to Qs, the QQQ, which is the NASDAQ 100, we ended the day, it was up 1.25, so a 1.25% for the day. What's interesting is we have a doji, we had a spinning top the last 2-day candle on the 12th, lots of indecision. Even more with the doji, it literally is a cross. It is about as high up as it went down, and it opened and closed, and our Heikin Ashi open and close formulations are exactly the same. Lots of indecision. Derivative oscillator has lost a significant amount of energy, leading to believe that the move would be up. We still don't have a crossover yet on the MACD and the signal line, so we'll continue to watch for that to see if that occurs. If we look to see what happened during the day, we see that there was a green open box up in the morning, a spinning top, and then a Huge up movement in the afternoon. Derivative oscillator was in the green the whole time. In fact, we haven't had a crossover yet. We're continuing on the pullback on the Q, so we'll continue to watch for that. See if the Q's actually cross over going down. That has not occurred yet. It's not as schizophrenic as the S&P 500 and the total market. Again, for the day on Monday, the Qs, the NASDAQ 100 up 1.25%. Going to go back to our 2-day chart and look lastly at gold, up 0.07%. What do we see happening with gold? Well, it's 2 dojis 4 days in a row. So we've basically got the last 2 2-day candles are dojis. Lots and lots of indecision. Gold has tried to cross over going down. I can see that it has technically crossed over, but that would be easy in the morning depending on what happens with gold for it to pop right back up. But it is technically right now at the end of the candle on the 16th. It has crossed over just barely going down, although 2 dojis, lots of indecision over the last 4 days with gold. Wouldn't be holding my breath to determine which way it was going to go. Derivative oscillator still positive, although it's lost a lot of its energy. Like I said, the MACD has technically crossed over going down. Let's look at what happened throughout the day on our intraday 4-hour chart. Up movement in the morning. On Monday the 16th, down movement in the afternoon. Derivative oscillator is positive. Don't have a crossover yet. Going up on the 4-hour chart. So continue to watch. 4-hour chart still in a confirmed up move. The 2-day chart on gold is trying to cross over in a confirmed down move. So continue to watch. Lots of indecision in the charts. We will continue to see if those backups on our main indexes, that is the total market, the S&P 500 and the NASDAQ 100, those backups on the 4-hour charts are going to roll back over and keep going down, so we can see some confirmed down moves, which might give you entries for your virtual trades in the Qs, that is the NASDAQ 100, an inverse fund such as QID perhaps, and in the S&P 500, if it rolls back over on the short chart going down, you might find an entry point on something like the ProShares short S&P 500. That identifier is S as in Sam, H as in hotel. Thank you so much for joining us. If you have questions, problems, concerns, we love to hear from you at Charting Wealth. Just go to our website, write us right from there. Follow us on Facebook, Twitter, Instagram, YouTube. If you're not already signed up for our newsletter, you need it. You can get it from us every day. All you have to do is go to the website, sign up for it. We'll also send 2 bonuses with that. You'll get a link to our How to Read a Stock Chart video. In addition, you'll also get the layout that we use at freestockcharts.com. Thank you so much for joining us. Be with us all week, every week at chartingwealth.com.